All eyes have been on the all-important ECB data release, and our interview today will make sure you have all the information you need to know about it. I'm Kiri Blore, and joining me on the phones today is Craig Erlam. Craig, the question on everybody's lips today was, will Mario Draghi walk the walk after he talked the talk last time around? And it would certainly seem he has, as it comes as no surprise that, as predicted, he has lowered the benchmark interest rate to 0.15%. Do you think it will have the desired effect? He clearly has said he has not finished, so what else do you think will happen?
Well, I don't think necessarily the lowered interest rate is going to have too much of an impact. I think we've got to look at the broader range of tools which they've chosen to use. There was a lot of speculation in the lead up to the meeting of whether the ECB is going to opt for lower interest rates or whether they're going to see negative deposit rates, quantitative easing, and instead they decided to offer a little bit of everything, including purchases of mortgage-backed securities and ending the sterilisation of bond purchases. And I think it's going to be the use of all of these tools to try and stimulate the economy that's going to have the biggest impact. The only thing that wasn't announced was quantitative easing, and this, I think, is the hint he was trying to drop with that comment that they're not done yet. I think what he's essentially trying to say is we've still got quantitative easing in our arsenal, and we will use that if need be.
Is the financial system geared up for this?
Well, I think we were prepared for an announcement. I think based on the reaction at 12:45 today, the markets had priced in a cut to the main refi rate and a cut to the deposit rate, which even then I think came as a small surprise to a lot of people because there'd been so much reluctance previously. What hadn't been priced in was, like I say, all of the tools that had been speculated about being used at the same time, and I think this has been the shock to the system today. This is why the euro has fallen another 100 pips, or an entire cent against the dollar, following a 4-cent drop over the last month. That's why equity markets are responding so positively, because I think we've got to look beyond what this does in terms of things like lending rates, but the fact that the ECB are being a little bit proactive for once and looking at ways to stimulate the economy, not just by weakening the euro, but with the lending scheme as well, these TLTROs, this effort at trying to lend money to the areas of the eurozone economy that really need it.
Now, moving on to the deposit rate, it is now negative. The theory is the money will be there to encourage consumers and businesses to borrow. Firstly, is there this kind of demand? And what will happen if the banks decide to absorb the costs? And can they really afford to do it, or will we see them passing on the cost to customers?
Well, I think this was always going to be the problem all along. This is one of the biggest questions that people had about whether the effectiveness of this negative deposit rate, because as you say, banks may look at this 0.1% charge and think, well, is that worth the cost, or is the risk of effectively lending to an economy that's stagnating at best, where we're still seeing people struggling, we're still seeing a lack of spending, we're still seeing a lack of business investment? Is the risk associated with that still bigger as a cost than the 0.1% being charged by the ECB to deposit their funds there? And personally, I still think that this is going to be seen as a bigger cost. I think this is why the TLTROs alongside it were so important, though. I think the fact that the ECB are not just trying to encourage them to lend or otherwise pay a fee of 0.1%, but by giving these TLTROs, so giving these cheap loans for 4 years to try and encourage them to lend to the real economy, the two paired together could be what was necessary in order to actually get banks lending again.
These decisions seem to be completely based on the belief that there is a demand for these loans. What is the situation if there is no demand?
Well, if the demand doesn't happen, then we continue as we are. I think that's going to be the real test now, because people have spent a long time blaming the banks, saying, well, the demand is out there, but the banks don't want to lend. But I think it's not just the eurozone where we've seen that's not necessarily true. We saw it a lot in the UK as well. We've seen it to an extent in the US. That it's not just the fact that the banks don't want to lend; it's that people don't want to borrow. People are looking at the economy and saying, well, unemployment is at the highest levels we've ever seen. The companies aren't investing money in what they're doing. People aren't spending money because they don't have the free money to actually spend. So what good is it me now borrowing money off these banks and trying to invest in my business, maybe hire people, if there's no one out there that's going to be interested in my business? So I think this is one of the things that needs to be repaired, because not only is business confidence low, consumer confidence is low, and eventually the two are going to have to work together in order to see a significant improvement in the eurozone that we all really desire and need.
And lastly, the euro dollar has sharply dropped. Is this something you can see staying for the long term?
I don't see it reversing in the next month or two. If I'm well, mate, not to the extent that we'd see it back towards the levels that we saw before the press conference. Like I say, we saw a 4-cent drop against the dollar over the last month, and we can't underestimate how big a drop that is just purely off speculation from the hints that Mario Draghi dropped a month ago. But then we've seen another cent drop again today, which again is quite a significant move given what we've seen in the lead up to it. I think we're going to see a more downside in the euro dollar over the next couple of weeks. I think in the next couple of weeks, 134 is the minimum target which I'll be looking for in euro dollar, and it could potentially even drop a little further. This is a huge package that the ECB has announced. They've opened the door again to quantitative easing, and all of this is going to continue to be weak for the euro. I don't personally see the euro moving back above 136 anytime soon.
That's all we have time for. The ECB have certainly made history today, and it will be interesting to watch this progress over the next few months. Mario Draghi has clearly said he is not finished, so until next time, it's goodbye from me.